Okay, now you might want to pause this and write all this down. So we have a little dipper, which means we need the market in this case needs to move up. We need to see the market move down quickly. We need to see that the market stops at the 618 or the 786. We need to then we can look to enter at the 618 or the 786, or we can enter on the break of the high. So how would you make the decision? Either entering at the Fibonacci retracement or wait for the market to break the high? Well, one way to wait would be if you see big bars. Okay, so there's a big bar. Now, let me go ahead and put this Fibonacci on here. And again, this is going to require you to monitor the position. So, as the market pushes down, trying to get this thing shrunk down so we can see it. Oh, I'm sorry. Okay, so as the market pushes down on this bar, you can see that's a big bar. Okay, this bar is bigger than both of these bars here. It's a big bar. So it's getting down to the 618. You want to see some confirmation. If you don't know the warning signs, I believe I put that on disc number 6. It's also on the coaching manual, which is on the downloads area on the website. But you can see here that this bar now is telling us, okay, the market is pausing. You can see here the volume has come in, but it was unable to penetrate this support. Remember, if volume comes in and the market cannot follow through, it usually means the market is about to reverse. So the volume comes in, the market can't follow through. There's a sign to get in at the 618. But if you're still nervous, if you're not sure that the market is going to reverse, you're just not convinced, that's when you could wait for the market to push above the high here. At that point, absolutely, you need to be inside the sweet spot. Okay? That's going to be one of the key criteria. So one method would be, if the market comes down to the 618 here before the start of the sweet spot, then what you would want to do is wait for either the market to slow down here at the 618, or wait for the sweet spot and say you're just going to get in when the market breaks above that high. Okay? So there's a very simple way to go through the mental process of moving from one opportunity to the next. It helps to have this all written down ahead of time. And believe me, you had plenty of time. Even if you missed this initial trade, then you're thinking ahead. Okay, what's the next position I can look for? Well, I can look for a little dipper pattern. Okay, what do I need to see? Well, I need to see this and that. You can write down the different steps. You can put the Fibonacci on there. As the market is moving up, you could have a Fibonacci from here to here. Then once the market keeps pushing up, you can have it from down here to here. Once it keeps pushing up, you can have it from here finally to here. Then the market starts moving down. You've got full 1-2 whole hours to calculate all this stuff, write your whole plan out. Remember, this is nothing that you're going to be rushing through. That's why I say stay away from the short time frames. Okay, I need to end this. I've gone on for 12 minutes. Again, I'm going to work with this. I'll try and keep it a little bit smaller and get more of this analysis in here. I might just reserve this for special opportunities like I see here.